Hello friends, welcome to the Graphics channel. Today we're going to talk about one of the most fundamental yet powerful concepts in technical analysis, support and resistance levels. Drawing support and resistance is actually the most practical way to understand where buyers are accumulating and where sellers are taking control in the market. And let me tell you, if you learn how to correctly draw and read support and resistance levels, you'll also gain the foundation to understand how most patterns and indicators work. So, if you're ready, let's start after the intro. First, let's define the basics. What is support? It's a level where the price is likely to hold as it falls a zone where buyers enter the market. What is resistance? It's a barrier the price encounters as it rises, where sellers dominate. For example, if Bitcoin repeatedly tests $30,000 but can't break above, that level is strong resistance. Similarly, if it repeatedly bounces at $25,000, that level is strong support. One thing to emphasize, support and resistance are not single lines, they are zones. Many beginners say Bitcoin can't surpass $30,000, but the price may rise to $30,050 or drop to $29,950. So, resistance is around $30,000. Expecting exact points can mislead you. Now, how do we draw support and resistance levels? The simplest way is to look at the chart and mark areas where price has reacted the most in the past. One reversal is not enough. The same level must be tested multiple times. For example, if the price has bounced off the same point 5 times, that's a significant level. Here's a tip. Start with higher time frames. Support and resistance levels you identify there are more meaningful than in a 5-minute chart. You can trade on smaller time frames, but always consider the higher time frame levels. What should we pay attention to when drawing these levels? First, there are fakeouts. Sometimes the price dips below support, and you might think it's broken, but then it bounces back up. This is a classic move to trap weak hands. So, check where the closing price is before assuming a level has broken. Daily and weekly closes are especially important. Second, volume analysis. Volume usually increases around support and resistance zones because the battle between buyers and sellers intensifies there. If a resistance is broken with low volume, the breakout is less likely to hold. But if volume increases strongly, the breakout is more reliable. Third, trend direction. In an uptrend, supports are more reliable because buyers are consistently active. In a downtrend, resistances are stronger because sellers control the market. So consider the trend when drawing support and resistance. Fourth, the role reversal rule. Old resistances can become new supports once broken, and old supports can become new resistances if broken. For example, if Ethereum breaks above the $2,000 resistance, when it pulls back, $2,000 may act as support. This is one of the market's most recurring behaviors. How can we trade with support and resistance? There are several strategies. The classic one is to buy at support and sell at resistance. For instance, if a stock consistently finds support at $100 and faces resistance at $120, buying near $100 and selling near $120 makes sense. But if support breaks, accept the loss and set a stop loss, as prices often drop sharply after support breaks. The second strategy is the breakout strategy. If the price breaks above resistance, this may signal the start of a new uptrend. As mentioned, volume is crucial. A resistance broken with strong volume is more reliable. The third strategy is the retest strategy. After breaking a level, the price may return to test it. For example, if $2,000 resistance is broken and the price rises to $2,100, then comes back to $2,000 and holds, trading at this point is safer, as the market has validated the level. Risk management is always critical. Never trade without a stop loss. If you buy at support and it breaks, the stop loss limits your loss. The market rarely goes exactly as planned. Supports break, resistances are surpassed. What keeps you in the game is minimizing losses. Now let's talk about common mistakes. Beginners often draw hundreds of lines, 10 supports, 15 resistances, and the chart becomes cluttered. The key is to mark only the most significant levels. A clean chart makes decision-making easier. Another mistake is using only one time frame, e.g., drawing only on a 5-minute chart. Short-term charts are highly volatile, and higher time frame levels are always stronger. For example, a daily resistance often outweighs dozens of minor resistances on a 5-minute chart. Let's consider an example. Suppose we analyze a stock. The stock repeatedly bounced at $50 strong support. It repeatedly turned down at $60 strong resistance. If the current price is $55, buying near $50 is an opportunity, while selling near $60 makes sense. This simple drawing helps predict market movements. In conclusion, support and resistance levels are the backbone of technical analysis. The first thing you do when looking at charts is identify these levels, as every strategy and indicator revolves around them. Remember, support and resistance are not magical lines, they reflect market psychology. People react at the same levels, which shows on the chart. The more you practice, the easier it becomes to spot these levels. That's it for this video. We covered what support and resistance are, how to draw and interpret them, and trading strategies based on them. I hope you found it useful. If you did, don't forget to subscribe to the channel. See you in the next video.